Welcome to Disruption Blueprint with Shannon Spotswood from RFG Advisory. In this podcast, we help advisors grow their net worth, build their businesses, and maximize their independence. We've built an award-winning platform with innovative technology, comprehensive service, and a team of individuals who are experts in their field to serve advisors. Join us for this journey where we explore everything that has to do with running an independent advisor practice as we bring together successful advisors, industry experts, and innovative minds who are on the bleeding edge to challenge the status quo, foster new ideas, and create a path for advisors to unleash their growth potential. Now, on to the show.
Welcome to a very special episode of Disruption Blueprint. I'm joined in studio by none other than Rick Wedell, Chief Investment Officer at RFG Advisory.
Hi, Shannon. How are you?
I am fantastic. This is a very special episode. We are celebrating the 1-year anniversary of the Bluemonte ETFs. Congratulations to you and your team.
Thank you so much. I appreciate it. And thank you and the rest of the RFG folks for all the help in creating those and getting those off the ground. Huge team effort.
We have such an incredible partners in our advisors, and their support and enthusiasm for delivering institutional caliber investment management to their clients is truly second to none. So I'll echo that gratitude. I want to start where I think is the most natural jumping off point in celebration of our 1-year anniversary, which is take us back to the beginning. What was the fundamental problem that we were trying to solve when we decided to build our own ETF suite?
Yeah. There's a couple of different things, right? I think if you go back to the iteration, like way back in the history of time, right? So back to 2016, we had launched kind of exactly what everybody else in the industry mostly does with their in-house models, which is we're building SMA strategies using other people's investment vehicles. And we did that for a long time. And we kind of realized midway through 2025 that there might be sort of a better way to do things. There's a couple problems with using someone else's investment vehicles to build out your investment allocation. The first is you never know when you might want to zig, but they're simultaneously trying to zag. And that sort of burned us a couple of times over the history of our, portfolio management. We would have a fund that was, a diehard growth fund. And then all of a sudden you would wake up and it's a value fund. And you're like, wait a minute, what are you doing? You get burned by a couple of those things, and that frustrates you as a portfolio manager. So that's, one point. And then the second point is, we observed what was going on in the ETF industry in terms of, these, high net worth family offices effectively creating their own ETFs to take advantage of that structure from a tax standpoint and from an expense standpoint. And we started to question, is there a way that we can actually bring this down to the retail level, that we can bring that same sort of management style down to the retail level? And it turned out that we could. And then last but not least, we were actually able to do it cheaper from an internal expense ratio basis than what we were doing before. And so when we really kind of put all those three things together, it took us a long time. There were a lot of, late nights with the board and everything else like that to say, like, look, I really think we should do this. But putting it all together, like, we were able to just deliver on that promise of better portfolio control, hopefully more efficiency from a tax standpoint, and then lower delivered costs versus what we were doing before. So it turned out to be kind of a win-win-win for everybody.
I love that. Keep walking down that path, and just let's get into the guts of Bluemonte and what makes this genuinely different. Because I remember so vividly, I'm logging the miles and we're yapping away with you in my ear. And when you had kind of the epiphany about the creative nature in which you've built the Bluemonte suite of ETFs. So what makes Bluemonte different, and why is that important?
Well, I think what makes Bluemonte different is, this is a fund family that is designed to sort of work with each other, right? So, this sometimes I think confuses a little bit of people. We've got like a large cap value fund, we've got a large cap growth fund, and we've got a large cap core fund. But when we think about putting them together from a portfolio management standpoint, they're really designed to be owned all three sort of side by side with one another. which then enables us to do some portfolio repositioning and some portfolio pivoting in a way that kind of is a very tax efficient and trading efficient manner. And so each fund is, in theory, capable of being owned on its own, and we have all the appropriate disclosures and all that kind of fun stuff. But really, the way that we've designed it, the way that we've marketed it is around this idea that you own the whole portfolio in a sort of prescribed way. And then what that enables us to do is if we want to shift from growth to value or we want to shift from international to domestic, we can do it inside the ETF wrapper itself as opposed to placing trades in the client account directly. And then the second thing that we've done is, we've really created ETFs of other ETFs, right? So our underlying holdings are these sort of large liquid vehicles. That gives us a lot of really granular control over what we own and what our, sort of top-down levers and exposures are. The other thing that it does is gives us really, really efficient and effective cap markets execution. Yep. So we can keep those bid-ask spreads very, very tight for folks. So it really is, I think, has been a great expression of what we were trying to do. We've been able to deliver on very low turnover in client accounts, and we're just really excited to.
You shared about the equity side of the portfolios, but this is a full mosaic with fixed income. So go into the 9 funds that constitute Bluemonte ETFs.
Yep. We'll use what I like to call a sleeve construct, right? So from the very beginning, I've never really loved the idea. Most portfolio managers have kind of a conservative income model and an aggressive growth model, and nowhere shall those two mix, right? If you're on this side of the spectrum, you have, very, very high fixed income, very, very little equity. You've got a big dividend yield or a coupon yield. And then if you're over on the growth side of the spectrum, it's exactly the opposite. Tons of equity, no fixed income, a whole lot of risk, hopefully a whole lot of return, but not much in the way of income. And so when we designed Bluemonte originally, we were like, let's expand that. Let's try and get 3-dimensional, not 2-dimensional with that. Let's basically think about, investors spanning from conservative to aggressive, but also spanning from, looking for income versus looking for growth, because those are two very different investors. You can have, anywhere on that sort of 3-dimensional page, you can have people. You can have somebody who's conservative, but also doesn't want income generation, right? Because income is a lot of times taxed in different ways, right? I can also have an aggressive investor, but an aggressive investor that really, really wants a high dividend yield out of the portfolio because that's their income stream, and they really want to see that income being generated and spend that as opposed to draw down a capital. And so we sort of designed it from the beginning with an equity sleeve. We have 5 different equity ETFs. They mix together for an equity sleeve. We have 3 different fixed income ETFs that are sort of core investment grade ETFs. So a long duration, a medium duration, a short duration. Those mix together in sort of an income sleeve, a fixed income sleeve. And then we have, last but not least, our income sleeve, right? Which is a single ETF, but it is really geared around generating a very high dividend yield from that portfolio. And what we find for that is that by combining those 3 different sleeves and different ratios, you can really kind of hit any point in that graph of, conservative to aggressive, high income to low income. And that's really, a little bit of the nuance of the architecture of what we built.
What I loved that I thought was, genius is found in the simplicity. And what I loved as you were initially describing this, to all of us during the imagination phase was just the focus on how advisors serve their clients. So the way that advisors talk about portfolio construction and think about portfolio construction is in conjunction with the financial plan. And where is the client in that conservative to aggressive, spectrum? How do I turn the dials in order to deliver them an investment portfolio that most, closely aligns with both their risk tolerance and their return objectives? And I love it because that's exactly what that does. It is this simple, it is genius is found in the simplicity.
Yeah. Well, it's just interesting that you bring this up, right? Because one of the things that we talk about the 4 tenets within Bluemonte, one of them is intellectual honesty. And I really do think building portfolios that are designed for financial advisors that are actually designed to be used in a financial planning context is a little bit different than what the most of the rest of the industry does, right? Like most of the rest of the industry, if they're launching a new ETF, it's what I call products that are designed to be sold, not products that are designed to serve, right? Ooh. And what I like about the Bluemonte ETFs is that they are products that are designed to serve. They're not necessarily like I don't even have a marketing brochure for our large cap growth fund. Like I don't have one, right? And that's because it's not really the point. The point was to create products that our advisors could use in the context of their financial plans, in the context of an overall investment strategy that really work well with those financial plans, and to not engage in the like, is my growth fund better than your growth fund? Because candidly, that's what actually trips up a lot of financial plans, is this idea that I should be making these large bets to try and outperform or this and that and the other. It kind of blows away the theoretical underpinning of your financial plan, which is you actually, you want your plan to perform, you want your portfolio to perform in a predictable fashion, not necessarily in a fashion that is, super volatile with a lot of tracking error relative to the underlying benchmarks and all that type of stuff. So it really is one of these things. It's, I think a lot of people look at the Bluemonte funds and they kind of scratch their head. They're like, what is happening here? Like, what is going on? But I think in the context in which we've designed it, it works. It works for people.
All right. So intellectual honesty, one of the 4 tenets. What are the other 3?
The other 3. Okay. So we've got usability, right? So once again, we always design, pretty much anybody that's on the RFG platform has immediate, push button access to all the different tools that we use. We trade the portfolios for them. It really becomes the easy button for both their clients and for the advisor to be able to access the team. The third pillar is humility. We're always ready to admit that we could be wrong at any moment, right? And anybody who's listened to any one of our sort of market updates would know that, most of the time we are not making strong calls around, hey, the market's about to go up or the market's about to sell off or this is about to happen or that's about to happen, because the reality is that most of the time you get those calls wrong, right? Like, it's really funny. I'm a huge data nerd. I'm going to take a brief veer off of your question. We're going to dive down a rabbit hole. But, if you think about it, even if you have, let's say you have a 50 or 60% chance of getting it right when you decide to sell, and then maybe a 50 or 60% chance of getting it right when you decide to buy back in. When you actually multiply those two together, because you've got to get the buy decision right and the sell decision right, when you multiply those two together, it means you have like a 35% chance of actually timing the right call, which is once again one of those humility things, right? Like I know that, hey, I might be smart enough to get this right 60% of the time. That means I should not be making that decision, right? Like that's part of what humility means. Last but not least, fourth, no ivory towers. Accessibility is what we call it. Like anybody might put my cell phone number at the bottom of every email I send. I mean it. If clients ever want to get a hold of me or anything else like that, or anyone else on the team, they always have access to us.
I love that. Intellectual honesty, usability, humility, and no ivory towers. It's such a strong foundation from which to build. All right, 1 year in, what has surprised you most about advisor adoption? I
mean, I actually did not think that we would be at the AUM levels that we're at today a year ago. So that has been really, really rewarding in terms of seeing advisors adopt this for their clients, in terms of seeing them, use this as a core asset management solution. So that's been amazing. And it's just been surprising to see the sort of openness and willingness with which advisors are willing to embrace, and their clients candidly are willing to embrace the product. So, I think we're well ahead of what our internal estimates would have been, in terms of the overall AUM on the platform. And it's just continuing to grow. So it feels great.
Just keeping in that same place is, How are advisors talking about the Bluemonte ETFs to their clients?
I think the advisors do a couple different things. One, they'll look at, sort of the historical, back look at our portfolios, and they'll think about how we've performed relative to our benchmarks. And they'll have a little bit of that conversation with the client to say like, hey, these are products like when we put them together in this particular matrix, this is how they've performed over time, and this is what that looks like. And, we're kosher and okay with that. Demonstrate to the clients that the portfolios perform the way that they should. But then the other thing that I think a lot of advisors do is they will show the client the website and say like, hey, yes, there's a Bluemonte wrapper on top of this, but underneath that are funds from, Vanguard, there are funds from State Street, there are funds from these larger companies that and trust. And that's what the underlying is that you own. And then they may even drill down a layer further than that and say like, hey, so that means at the end of the day, your holdings in Apple are X percent, or your holdings in Netflix are this percent, and kind of just demonstrate to the client and walk the client through exactly how this is working and why this is working. Because once again, the Bluemonte ETFs themselves are almost a means to an end, right? Like it really is a way of delivering portfolio management services in a very efficient, effective manner, as opposed to, like, hey, there's some fund managers that are out there that's like, this is the year to own Ford, not Chevy, right? Like that's not what the Bluemonte ETFs are about. The Bluemonte ETFs are about using structure to deliver a very effective wealth management solution.
And what I love about that is, for 10 years, you've been very clear about the positioning of RFG Investment Solutions, which is to be an institutional caliber answer for advisors to be able to deepen their client relationships and win more prospects. And I mean, that's just a testimony to it.
Well, and it's really funny. So a little while back, there was an award that was given to someone. And
the hottest CIO sitting right next to me.
That is not true. But what is funny is whenever they give any one of those awards, it's always qualified by CIO in wealth management, right? Which I think is actually a hugely valuable distinction in the industry, because here's the deal, right? The CIO of a hedge fund versus the CIO of a mutual fund versus the CIO of a wealth management operation all have somewhat very different jobs, right? Like it's just a different thing, right? And so, it is one of those things that when I think about what we really designed the ETF portfolios to do, is that let's be a holistic, comprehensive wealth management solution. Let's manage money for clients in the same way that really large institutions would manage their own wealth portfolios. Let's, once again, be products that are built to serve, not products that are built to be sold.
Yeah.
And I think, I'm very proud of what we built.
All right. What's next? What should advisors and their clients expect from Bluemonte on the horizon?
I mean, from the ETF perspective, we are in the process of launching another Section 351 exchange vehicle. I think ours is a little nuanced versus some of the other offerings that are out there in the industry, in the sense that, one, we have a large swath of ETFs sort of behind it, but then two, that this is a product that is very competitively priced versus the rest of the industry. So, I think that it's an interesting tool for our advisors to be able to use with their clients where they've been managing some of these portfolios for a long time, and they're looking to use the advantages of the tax code to kind of move those into an ETF wrapper and take advantage of sort of a very low-cost diversification, almost a tax-free diversification play. So, we've got that that we're working on. We're continuing to just sort of grow and expand the overall offerings. And we are looking, at additional tax management style options, particularly for the advisors that are on the platform. This isn't necessarily for the ETFs themselves, but some software overlays and some trading tool overlays that'll just get us sharper and better at actually trading these to be able to be as efficient as we possibly can for our advisors. So
one of the things that I hear constantly in feedback from our advisors is how much they appreciate partnering with you and your team for those concierge level, not only trading services, like it's a little bit old school, right, to have a concierge trading desk, which I love, but also just in terms of working on existing client problems, working on prospects and complex portfolio construction needs. Like, why do you think that is a competitive differentiator and a value add for advisors?
Well, here's the thing. So many firms now in our industry are going what I would call the exact opposite of that direction, right? They're honestly, and it's odd, right? In a way, what the firm is doing is they'll show you this big snazzy software tool that they've developed, right? And they'll say, like, look at all the powerful creative bells and whistles that, this tool has. And look at all the cool things that you can do for your clients using this big piece of software. And the problem with that is, as I would experience it, is now, in order to rebalance a portfolio, it's the moral equivalent of like landing the space shuttle. There's all these toggles and switches and dials and what's your tax budget? And are you going to use half of that right now? Or are you going to use more of that or less of that? And do you want to sell this position or not that position? Here's a list of all the trades that are generated. Do you approve or do you not approve? Do you want to tweak this? Do you want to tweak that? All of these different decision points for the advisor to be able to build out one trade. Right. And then when you get to the very end of that process, they'll be like, do you want to send this to our trading desk? And you're like, dude, I literally have just done everything that a trader would actually want or need to do, right, for the trader. At this point, I might as well send it to Robinhood. Like, I don't know why there's even a trade desk involved in this. And basically, I do know why a trade desk is involved in this because, there's some arguments around blocking trades across an entire RIA. And that's essentially the only function that most trade desks, serve at this point is they aggregate orders from a bunch of advisors and then block trade them. Like, that's the only thing they do. It's just, in my mind, a giant waste of the advisor's time.
Amen.
Right? Like, it's a huge waste of the advisor's time to, if you look at some of these systems, it's like 50, 60 mouse clicks. And we talk about it in terms of mouse clicks, but it's like 50, 60 mouse clicks to get the trade processed.
Yeah.
I want that down to 2, right? Like, do I want to raise cash? Yes. How much cash do I want to raise? Yes. Send, right? Done, right? Like, I don't want the advisor to think about it anymore. And if they do need to think about it anymore, someone will call them and ask them the question so that then they can do the mouse clicking. And I just think that, the whole industry has been geared up to kind of transfer more work onto the advisor's plate in a very devious way. Because it's like, I'm giving you the power to make your own decisions. What you're really giving me is the power to waste a lot of time. And that's time that advisors would be better spent building relationships, contacting their existing clients, contacting prospects, doing the work that actually builds out and establishes trust with their clients, as opposed to, managing the trading process. It's a giant waste of time. Don't do it.
Well, it's funny. You have your soapbox. Well, a few, but one of, you've got your market timing soapbox. If I have my soapbox, it is nothing drives me more crazy than advisors spending their most valuable resource, their time, on non-revenue generating activities. And this is the number one thief. And I believe misappropriation of an advisor's time is acting as a PM, acting as a trader, like, It is ripe for rethinking, and that's why it demands, though, a really sophisticated and aligned investment solution to be able to do it. So nicely done with Bluemonte.
Well, and I always say, like, your clients want to know that it is being done and want to know that it's being done well. And huge bonus if they actually have access to the team that's doing it, right? If they want it. But nowhere in there does the client require you to be the one that's doing it.
That's right.
They just want to have access to the team that is. And so I think that Bluemonte does do a nice job, or the RFG investment team does a very, very nice job of kind of pairing those two up, where it's like, look, the advisor doesn't have to waste time on this, but if the client ever has a question, it's not like I've got to go call JP Morgan and be like, can I speak to your portfolio manager? It's like, that's not happening. So, yeah.
One last shout out on as it relates to, let's go from 45 clicks to 2 clicks is we recently rolled out the trading center within Click One, which is our AI enabled dashboard for advisors, really the command center, Click One command center. It's in the name. And it was fun to sit on the sidelines and watch you and the beta advisors who had raised their hands to be a part of designing that alongside your team and our partners at Mile Marker and the Data Lake, is that there was such a fast feedback loop around how do we eliminate those clicks? How do we make it more intuitive? How do we hear the advisor's feedback, the licensed CSA feedback for how trades are being submitted and clients are being communicated to? And that level of agility and control, leveraging AI where it's appropriate, building a bespoke institutional solution. I mean, I think it's where the industry is bifurcating, and firms that can answer that call to advisor need to build their business without compromise, to close those prospects, to serve those clients deeper, multi-generationally, are well positioned.
Yeah, I don't disagree. It's also, I think, a really cool, application in real time of the power of being able to aggregate all of that data across multiple different systems. And, it's been really, really cool to see in action.
Yeah. Anything else that you want to leave on the table for the 1-year anniversary of the official launch of Bluemonte ETFs?
I mean, I just want to say thank you to anybody who has participated, to anybody who has entrusted us, from the advisors all the way down to the household level. I just want to say thank you. It's been a tremendous opportunity. It's probably the coolest thing I've ever done in my career, and we're excited for what's to come.
Echo that, ditto. Mm-hmm. And then, next up on the bucket list is ringing the bell on the NYSE.
We'll get there. We'll get there. All right.
Thanks so much, Rick. Great having you.
Thanks, Shannon.
Thank you for listening to the Disruption Blueprint podcast. Visit our website at www.rfgadvisory.com. or schedule a call on our advisor resources page. And don't forget to click the follow button to be notified when new episodes become available. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Information here may be provided in part by third-party sources. These sources are generally deemed to be reliable. However, neither our guest nor RFG Advisory guarantee the accuracy of third-party sources. The views expressed here are those of our guest. They do not necessarily represent those of RFG Advisory, its employees, or its clients. This commentary should not be regarded as a description of advisory services provided by RFG Advisory or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives of Private Client Services, member FINRA SIPC. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Private Client Services and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place. RFG Advisory is an SEC-registered investment advisor. SEC registration does not constitute an endorsement of RFG by the Commission, nor does it indicate that RFG or any associated investment advisory representative has attained a particular level of skill or ability.